Imagine pulling out your credit card for every coffee, grocery run, flight, and online purchase this year, believing you're earning the best rewards possible. Now imagine finding out that your card has quietly cost you hundreds or even thousands of dollars compared to another option. That's exactly what's happening to millions of Americans in 2026. Credit card companies spend billions of dollars convincing us that their rewards are unbeatable. But the truth is much more complicated. Some people are leaving serious cash on the table by sticking with travel rewards cards, while others are missing out on luxury flights and hotel stays because they chose simple cash back. The surprising part is that the best card has very little to do with the card itself and everything to do with how you actually spend your money. Today, we're breaking down the real numbers behind cashback and travel credit cards so you can stop guessing and start maximizing every dollar you spend. Let's begin with cashback credit cards because they're the easiest to understand. Every time you swipe your card, the issuer gives you back a percentage of what you spent. Buy $100 worth of groceries with a card offering 3% cash back and you've earned $3. It sounds simple because it is. There's no need to calculate airline miles, compare hotel redemption values, or worry about blackout dates. The money can usually be deposited directly into your bank account, used as a statement credit, or redeemed for gift cards. For many Americans, this simplicity is the biggest advantage. There are no complicated reward charts or hidden calculations. Every purchase has a clear and predictable value, making budgeting much easier. Travel rewards cards, however, operate in a completely different world. Instead of earning dollars, you're earning points or miles. At first glance, this might seem less valuable because 10,000 points doesn't immediately tell you how much they're worth. That's because the value depends entirely on how you redeem them. One redemption might give you 1 cent per point, while another could deliver 2, 3, or even 5 cents per point. This flexibility is exactly why travel enthusiasts love these cards. A carefully planned redemption can turn everyday spending into international business class flights or luxury hotel stays that would otherwise cost thousands of dollars. Now here's where things become interesting. Let's imagine two people each spend $30,000 on their credit card over the course of a year. One uses a 2% unlimited cash back card, earning $600. The other earns travel points worth roughly the same amount if redeemed poorly. But if those travel points are transferred to airline partners during promotional periods and redeemed strategically, their value could easily climb to $900, $1,200, or even $1,500. Suddenly, the travel card appears to be the obvious winner. But there's a catch that many advertisements conveniently ignore. Those higher values only exist if you're flexible with travel dates, understand airline loyalty programs, and actually enjoy planning trips around award availability. For the average American family, life doesn't always work that way. School schedules, work commitments, and holiday travel often mean booking flights when everyone else is traveling too. During those peak periods, award availability can disappear quickly, forcing travelers to redeem points at much lower values. In those situations, the person with $600 in guaranteed cash back may actually come out ahead because cash has no restrictions. It can pay utility bills, reduce grocery expenses, cover insurance premiums, or simply stay invested in a high-yield savings account earning interest. Another factor that deserves attention is annual fees. Many premium travel cards charge annual fees that can exceed $100, and some luxury cards charge several $100s every year. At first, these fees seem outrageous. However, frequent travelers often recover that cost through airport lounge access, travel insurance, global entry or TSA pre-check credits, free checked bags, hotel credits, and statement credits for various travel purchases. If you regularly use these benefits, the annual fee may actually provide more value than it costs. But if you rarely travel, paying a large fee for benefits you never use can quietly reduce your overall rewards. Cashback cards usually avoid this problem. Many of the highest-rated cashback cards have no annual fee while still offering competitive rewards on groceries, dining, gas stations, streaming services, and online shopping. For households focused on everyday expenses rather than vacations, these cards often provide consistent long-term value without requiring extra planning. Predictability becomes one of their greatest strengths. Let's also talk about welcome bonuses, because this is where many people make emotional decisions. Credit card advertisements often promise bonuses worth several $100s or tens of thousands of travel points after meeting a spending requirement within the first few months. These offers can be extremely valuable, but they should never encourage unnecessary spending. If you're buying things you wouldn't normally purchase just to qualify for a bonus, you're defeating the entire purpose of earning rewards. Smart credit card users treat welcome bonuses as an extra benefit, not as a reason to increase spending. Your credit score also plays an important role in this decision. Most premium rewards cards require excellent credit, often supported by a strong FICO score. Applying for multiple cards in a short period can temporarily lower your score because of hard inquiries and reduced average account age, while responsible use generally helps rebuild your credit over time. Constantly opening and closing accounts simply to chase bonuses can become risky if you're planning to apply for a mortgage, refinance a home, or finance a vehicle in the near future. Perhaps the biggest mistake people make is carrying a balance. Rewards become meaningless when interest charges begin accumulating. Credit card interest rates remain historically high in 2026, and paying 20% or more in annual interest can erase months of rewards in just a few billing cycles. Whether your card earns cash back or luxury travel points, the smartest financial strategy is always to pay the statement balance in full every month. That single habit is worth far more than any rewards program a bank can offer.
It's also worth considering how rewards fit into your broader financial goals. Imagine someone focused on building an emergency fund, contributing to a 401k, paying down student loans, or investing consistently for retirement. For that person, cashback provides immediate financial flexibility. Every reward dollar can strengthen their savings or reduce debt. On the other hand, someone who already has a solid emergency fund, invests regularly, and enjoys taking multiple vacations each year may receive significantly greater lifestyle value from travel rewards. Neither approach is universally better because each serves a different financial objective. Technology has also changed the rewards landscape. Banking apps now track spending categories in real time, recommend redemption options, and notify users about bonus earning opportunities. Artificial intelligence is beginning to personalize offers based on spending behavior, making rewards programs more competitive than ever before. Credit card issuers are fighting harder to keep customers loyal, which means consumers who compare options regularly may find better rewards than those who keep the same card for years without reviewing alternatives. So, which option actually saves more money in 2026? The answer depends on whether you're measuring dollars or value. If you want guaranteed savings with maximum flexibility, cashback is incredibly difficult to beat. It's simple, predictable, and useful for every financial situation. If you travel frequently, enjoy learning airline and hotel loyalty programs, and consistently redeem points strategically, travel rewards can produce value that cashback simply cannot match. The smartest consumers aren't choosing based on flashy commercials or celebrity endorsements. They're choosing based on their own spending habits, travel goals, and long-term financial priorities.